All right, good morning to all. Welcome. Welcome to our Fireside Chat today with Julie Sandler from Pioneer Square Labs and Josh Williams from Seattle Bank. Thanks to all for joining. Just some quick logistics. We do ask that if you are not speaking, right, please put yourself on mute. Right, I'm sure your dogs are cute, your kids are adorable, but they are probably not the best inclusion to our session today. So please keep yourself on mute unless you'd like to speak, so we can all have the best experience together. That said, if you do have questions along the way, feel free to kind of speak up in between. Using the video would be the best, right? Just speak up. Or if you would rather not and you prefer to use the chat windows to submit your questions, feel free to do that as well. That'll be fine. Okay, so before we start, just a little bit about my organization. So I run the Alliance of Angels, and my name is Jane. We're an angel group here in Seattle. Every year we put about 10 million into 20 companies. Most companies that are fundraising from us, they're looking for a total of between $500,000 to 1.5, right? And our typical check size is 250 to 500. We're a stage agnostic investor and also a sector agnostic investor. The hard filter is we only invest in companies headquartered in the Pacific Northwest. So many folks have wondered, like, with the ongoing public health situation, right? Are all investors kind of not sitting on their hands and not doing any investing? But the truth of the matter is that started fundraising after a short pause in Q1 has pretty much come back, and we're as busy as it has been the same time last year, this year. Right. So if any folks are fundraising, if they're looking for additional funds for your company, feel free to send me a note. My email is right here. Send me an email, and I'm happy to introduce more about Alliance of Angels, how we can help you and your company. All right. And with that, I'm going to stop talking. Right. And I'm going to hand the session off to our speakers today. I'd like to invite Josh Williams to join us.
Great.
Josh.
Great. Thank you, Jane. Yeah, good morning. My name is Josh Williams, and with Seattle Bank. I'm excited to be here. I was so excited. I logged in yesterday, and Eugene had to text me and tell me I was a day early. So obviously, like the rest of you, I'm experiencing a bit of the Groundhog Day effect of COVID-19. But in all seriousness, really glad to be here. For those of you that don't know about the bank, we're primarily a boutique bank working with individuals, business, and community organizations here in the greater Pacific Northwest. And we actually just announced that in the coming year, we're going to be one of 11 financial institutions partnering with Google to bring a better banking experience through their expanded Google Pay ecosystem. So for those reasons, when we look at our clients, how we support them, and how really the economy and technology is evolving to solve more problems, we're really happy to be a supporter of the Alliance of Angels. We think that one, having a really robust ecosystem to support founders and early stage companies is important. It's important to those companies and to our broader community and economy. And we think Alliance of Angels is really just shown great leadership and consistency in that regard. So we're really happy to be a part of that and be a part of this discussion today, which is so much of what they do is bring great people together, start those dialogues, and build connections so that big things can happen. Much along those lines, happy to introduce and to have a chance to speak with Julie Sandler today. She's managing director at Pioneer Square Labs. She'll talk obviously about that business, both the lab and venture side of that business. But I think what's interesting in looking at her background is she has both experience working at and investing in some of the larger tech companies here that we know locally, and is also clearly very active on a number of boards, on the faculty at University of Washington. And so for all those reasons and more that you'll get a chance to hear about, clearly somebody that's exhibiting leadership as well in this community, and her work at Pioneer Square Labs, again, is an important part of that. So appreciate her being here, and really looking forward to hearing from you, Julie. And maybe just get things started off, I'll just ask you to introduce yourself and maybe give a bit of a sense for the team on your focus and PSL's focus. So thanks so much.
Sure, Josh, thanks so much for that intro, and really great to get to connect with you and the group here today. Thank you for having us. Pioneer Square Labs, as you said, is both a startup studio and venture capital fund really focused on the Pacific Northwest. The startup studio works with local founders to create entirely new companies from scratch. So we're not like a classic incubator or accelerator. We're creating brand new companies side by side with local founders. We've spun out about 25 companies out of that entity over the past 5 years since our studio's inception, all of which have been backed by third-party VCs, investors, et cetera. One of the neat stats is, over the course of the past couple of years, about 13% of all tech venture deals at the seed stage in our state were founded at our studio. So we've been very busy, and it's been very gratifying to help move the needle a bit on local company creation here. The venture fund, PSL Ventures, we're in our Fund 1, $80 million fund, really focused on pre-seed and seed investing. Here in the Northwest, investing often like right at company inception when it's sort of a couple of folks with a dog and an idea. We love investing there. And the neat thing about our model is we've got this 22-person team across not only the 5 partners, the 5 of us, but also engineers, data scientists, designers, product marketers, ops, finance, recruiting, all the kind of things that are great to surround your company with. And so this combination of studio and fund has just been a really exciting new center of gravity that we've been working to create here in town to create as much opportunity and impact for our region as possible.
Well, that's great. Yeah, those impressive numbers, impressive impact. So, so I guess one, just in terms of folks for today, kind of the plan, I'm going to ask Julie a handful of questions. We will absolutely open it up, and a really great part of these fireside chats, as it were, is hearing from each of you. So as Eugene said, we'll kind of get down the road a little bit, and then I'll certainly invite those questions. It's easier to do it, just sort of like chime in when I speak up. I'll try to periodically check the chat, but I can only do so many things at once. Otherwise, I'd have Julie's job. But glad to have you guys. So one of the things on your website, Julie, that I loved was the statement that nothing is too early for us to consider. So that's always a fun place to start, right? Clearly, I'm sure that that's a bit of the exception, not the rule. But I think it's a great place to start in terms of what do you look for in terms of signal or the story? What are the pieces that you guys see as success factors that allow you to move forward in pursuing something, let alone investing?
Well, I'll tell you, we just had our annual meeting with all of our, large investors come. We did a Zoom meeting this year, and we pulled the stat that out of our venture fund, 70% of the investments that we've made have been made within 2 months of company incorporation. So we really are investing like crazy early. And because of this sort of approach that we've been taken as a venture fund of our size, there's really, 3 things that you're looking for at that stage, because there's not much there. I mean, there's often a deck and a great idea and a team that's coming together. And for us, it's number one, you want to have a team that you just look at and think, oh my God, these are the inevitable human beings to build something in this big market. And you almost can imagine no hurdle that they wouldn't, be able to knock down along their path to achieve that. So at the beginning, the people component it's always important. It's especially important because 99.9% of everything you'd want to see to make a high conviction bet is probably not going to be there at that stage. So the conviction comes from feeling really, really good about the people across the table from you, or in some cases across the Zoom. Second thing would just be a large, quote unquote, venture scale market. And we define that as a market that either now over the course of the next 4 to 5 years, you could see becoming, a multi-billion dollar market. And that may be a market that already exists that you are attacking in a novel way with technology or your approach. Or it might be a market that is emerging or that you're helping to create and grow by virtue of what you're doing. Those 2 things at the beginning, those are the best things that you can diligence. Often a team may have the beginnings of a product or a product vision at that moment, and a sense for what could be the possible point of differentiation or some type of sustainable advantage around that product vision is also there. But I'd almost call that secondary to the people, then followed by the market story.
Yeah, that's great. I think the sort of the $1 billion is an important way to figure out if this is a good business or a good venture opportunity. So that's a helpful framework. I think pretty easy to start to delineate. So then how do you go back to the people, which I suspect is not quite so easy? You know, I love that sense of inevitability, but what does that look like? And, you know, I think we all read, I think, various stories of, do you want somebody who's, you know, done it before, or somebody who's never done it? Should they be an insider or an outsider? Like, how do you think about that?
I love both personally. I love on a founding team to see somebody who is just so totally naive to the challenges of the industries they're tackling. They almost don't see obstacles in the same way as the like more seasoned, jaded counterpart that they're partnering with, who's gonna know like how to avoid learning some lessons the hard way. But you know, they end up balancing each other out pretty nicely. So I mean, actually, I think if you look at a lot of our teams in our portfolio, we've got some pretty unique industries to be found there, you know, debt collections and lumber and you know, just strange categories that you might not think, oh wow, natural avenue for a new tech company. And having that combination of the sort of the technologist or business leader who's just like, hey, we can do anything to, you know, attack this industry, with that veteran who can sort of help mitigate any of that naivete is really powerful. Other things that we do, and I'd say this has even become more important during the pandemic, is I'm going to make like a dozen phone calls and interviews about folks that, you know, a founder has worked with, partnered with, been led by, to make sure that I understand enough about how that person has performed, thrived, been challenged in different contexts over the course of his or her career and an entrepreneurial path. Those calls are super important, especially these days when we're kind of meeting in the second dimension and you miss out on some of those interpersonal human cues, both between, you know, myself and the founders between each other. That kind of background is hugely important. And, you know, in the context of that dialogue too, I mean, I don't know that all investors say this, but to me, it's also important to feel like, wow, this is someone with whom I could have a really trusted, transparent relationship over the course of the next decade. That's kind of what we're signing up for. I mean, you know, you mentioned the University of Washington. I always say to my students that, you know, today, you know, in 2020, you know, over half, you know, of marriages will end within, you know, the first 5 years. People getting married today, and the seed investor relationship not only lasts a lot longer, but it's a hell of a lot harder to get out of. So you want to make sure you're both doing a lot of diligence on both sides, that there is that trust and sort of shared set of values around how a board and team should be communicating, operating, and making decisions.
Yeah, it makes a ton of sense. I think given that real focus on looking at relationship components, really between investor and founder, how do you balance that long-term view right now with what we hope are temporary yet also pretty exigent set of unique circumstances? How are you guys balancing that? And maybe just what are some observations you're seeing in terms of you know, fundings or companies that maybe portfolio companies? Like what are you guys seeing where you sit?
Oh man, it's so hard on both sides. It's hard. I mean, we're making a lot of investments very actively. All firms right now are very active, both in making new investments as well as doing follow-on investments. It's just unbelievable amount of just capital sloshing around out there right now, which is sort of a weird reality given the crippling economic crisis that we're all experiencing. But I mean, it's happening, it's underway. I'm of the point of view that we won't actually know what the impact of that dynamic really looks like until, you know, more time plays out. Maybe we all go back and you know, meet each other in person and say, what were we thinking? But I don't think that'll be the case. From a trends perspective, opportunities perspective, I mean, there's sort of an interesting conundrum that I think the venture industry at large is dealing with around this point around market timing. So, you know, since the beginning of, you know, the pandemic and its onset here in the US, going back to, you know, March, everyone was saying, oh my gosh, this is it. This is the black swan event. This is going to be the most major fundamental shift in our socio-cultural approaches and behaviors that we've ever seen. And there's going to be a lot of opportunity that comes out of that. I agree. There's going to be a lot of opportunity that comes out of this year and all of its sort of reverberating implications down the road. What's challenging right now is understanding when you meet with a company for the first time, for instance, is this good market timing or is this good COVID timing? And especially with the news over the past couple of weeks, the Pfizer and Moderna vaccines, the efficacy, likelihood of distribution at scale, it now seems like, okay, we have an end in sight. I'm not sure exactly when that end is, but it's in sight. And so if I'm building a product that is focused on workforce collaboration when the majority of folks are at home, well, the way this will probably play out over time is that some workforces, it'll be business as usual when they go back. Some workforces will be forever changed. And some will be kind of a hybrid, where certain employees sort of treat their work approach and style very fluidly. And so how do you think about, a specific bet that is basically targeting one of those scenarios when odds are there's likely to be a lot of diversity in how companies and people approach this moving forward once the pandemic has more or less, sunset. So that's a challenge right now that's unique, I think, to these sort of moments in history where the entire world is kind of brought to its knees. And we're trying to make sure that we have a case whenever we make investment that the market timing beyond COVID is clear and at least something we can develop a viable thesis around.
And I guess in the broader context, obviously we've seen this pretty significant shift to later and later exits. And of course, now obviously we're seeing some pretty notable IPOs, I guess finally seem imminent. But how are you advising founders today as they start to raise institutional levels of capital that they think about that time horizon and their business model or capital structure around that? How are you guys viewing that, this trend?
Well, I think in answering that question, it's probably important to point out how quickly that messaging and psychology has evolved over the course of 2020. So back in March and April, you talk to anybody in my job, you talk to any early stage founder in particular, it was, holy crap. I mean, all hands on deck. Let's redo that entire ops plan. We're going to probably have to do layoffs and furloughs, become more cash efficient, make sure we've got 18 to 24 months of runway in the bank. And everyone went through that tumult, back in the spring. What's changed today is the fact that because public markets across the board have just performed so well, limited partners sort of sit at the top of this capital value chain, keep investing in venture funds, in large venture funds. Venture funds are proliferating both in terms of the number that there are, and they're raising larger funds. And it is a founder's market. As a result, it is totally a founder's market, which nobody would have predicted. The odds markets on that in March and in April would have been just you wouldn't expect it. And that's a really powerful opportunity right now for founders that think, gosh, like maybe I don't need to fundraise, but it might be a good time anyway. The vast majority of rounds that we're seeing get competitive in some way. Investors are coming in earlier and earlier. I know a lot of folks on the call today are focused on their sort of pre-seed and seed rounds. Great time to be raising a pre-seed or seed round. There's hundreds of new seed funds that have been created looking just for talented people, by the way, in great geographies still, even if we become more geographically fluid right now. And so we've been saying to founders, hey, if you're up for a fundraise, now is a great time to do it. It's there if you want to do it. Odds are things seem to be progressing pretty well, and you want to make sure you still are well capitalized enough to have at least that 12 to 18 months. But we're much less concerned about it than we felt 6 months back. And we're seeing that in just the sheer number of companies that are able to successfully raise rounds up and down the stack.
That's great. Yeah, maybe just a few more questions on a sort of high level, and then we'll open it up here because I know people have some great insights. One, I'm particularly curious based on your experience at Amazon, and really they're relatively early in e-commerce. I mean, how are you seeing, and I guess I should know, you guys are a tech fund, like all of the companies that you're working with are tech companies. Just how do you see the opportunities in tech having evolved in the last, you picked a time frame, whether it's 5 or 20, 25 years, but how do you see that evolving in terms of what it means for business models, either sort of requirements of entry, just what those unit economics look like? How do you think that's changed, and how do you think about that given your experience and perspective there?
Yeah, I mean, so much of it comes down to the kind of company that you're building. Our portfolio is about 2/3 B2B/enterprise and about 1/3 consumer. And it's consumer tech, but it's very transactional consumer tech. There's a very clear business model, very clear unit economics from the get-go. And what I'd say is for consumer companies, understanding how you build a business from the early days while not relying on paid marketing has become increasingly important, regardless of whether you're a marketplace or a D2C company. Having some type of viral mechanic that allows you to grow upon your own success without sort of the classic, hey, I'll give Facebook $1,000 and within this period of time I'll get $2,000 back. That's a piece of it these days. But so many companies, I think, over the past several years have paid the price for really focusing just on paid without thinking creatively and foundationally from how do we build a business with a replicable go-to-market cycle that is not totally reliant on sort of a sort of cash machine. For B2B businesses, figuring out how to approach sales in a world that will very likely become increasingly digital, more meetings like this on this platform that we're on right now, it's become, I think, a top of mind thing, especially when you're a top line driving function. How do you shorten sales cycle times? How do you build trust? How do you deliver content, both marketing and otherwise, that convinces brand new people who have never seen you, never met you before, to buy your product? And if not, then certainly try it at the outset. I know a lot of sales teams across our companies are thinking very actively about that right now. And there's an opportunity there to work with teams, especially as they become increasingly distributed.
Yeah, that's great. Maybe one more just high level question. I know one of the reasons that we're so supportive of Alliance of Angels, it's the #1 funder of women-led startups in the Pacific Northwest. And so I just would be curious to hear your thoughts on where do you see just the priorities for the industry and for all of us as we think about how to improve inclusiveness and venture funding?
Yeah, well, go AOA. I mean, I would say one of the things that's been very heartening to see is the fact that the way that not just women investors, not just BIPOC investors, but all investors are starting to talk about this more as an accepted thing. When I started in the venture industry, specifically about almost 10 years ago, I'd started an organization here called the Seattle Entrepreneurial Women's Network, and it did it for about 6 years before I left Madrona. And when I would put on these events, I'd get every time questions from not just like one or two people, but a lot of folks saying, so could men host events and not invite women? And the notion that there were network inequities in Seattle that were so like deeply cutting for women and other underrepresented founders was just like not on the radar at all. The idea that someone would ask that question today without acknowledging just the vast inequities that exist between, founders who were not, white, male, heterosexual of a certain age, or not, like that's not a mystery anymore. And there's enough dialogue about it. What I would say for both, venture investors, and I know a lot of angel investors in the call alike, is I'd say it's wonderful that those numbers are becoming more and more of a focus, that you're more and more thesis driven about that. For us, it's been important. One out of every 3 companies that we spin out of PSL is woman founded. In most cases, female as a CEO. It's really powerful statement to make. Now, after you invest, what are you doing to help address the natural inequities that founder will have moving forward? Are you making those introductions to that next potential round of investors earlier on? If you've got access to great talent flow and recruiting resources, are you making sure that they don't have to be the squeaky wheel to get those resources? If you have folks who can help and advise, are you making sure that you are taking proactive steps to support those companies, knowing that inequities, systemic biases exist? And so as investors, we can play a really critical role in that. And that starts at the very beginning, including from those very first, angel check writers too.
Well, great. Well, those are great numbers, and thanks for articulating that and your leadership there. I think this is a great time to start to open it up. So again, if you have a question, you're welcome to just speak up. And if we run into a log jam, we'll get to you, or I'll also start to look at the chat while you guys start to ask questions in case we need to there. So any questions?
I'll go. Hi, Julie. Good to see you. I just wanted to talk about the Seattle market. And as we're all from the Pacific Northwest here, what do you think makes it sort of special and stand out? And how can we as investors sort of capitalize that?
Tara, so good to see you. Thanks so much for that question. Okay, for me, I think there's 4 things that come to mind briefly. One is just sort of the Seattle heads down ethos. We're not in the echo chamber that you see down in the Bay Area. There's much less hoopla around like, oh, what event were you at? Where did you speak? Who backed you? It's different. There's much more like, what are you building, and what ingredients do you need to build the company? And that's very powerful for founders. There's much less distraction. 2, I think, is just the talent piece, and in particular, technical talent. Like, if you believe that the next generation of great companies born in the world are going to have technology at their heart, there's no better talent pool to draw from than Seattle. 3%, I think it's almost 3% of our population here in Seattle are actual engineers, like trained working engineers. It's higher than any region in the country, maybe the world. And that's pretty amazing when you think about it. I'd say there's a great collaborative ethos here. And this has not changed even after the crazy growth cycle that we've had here in Seattle, that you have entrepreneurs who are literally competing with each other that also will just meet up for coffee and chat and view sort of the rising tide lifts all boats mentality as just as exciting as any type of new innovation coming down the pike. And then lastly, I'll say, success begets success. There's been like 1.5 unicorn companies that gets founded, every year in Seattle, like over the past, 25 years or so. That is accelerating, which means that now across not only tech, but also different verticals and industries within tech and innovation, there's probably someone here to talk to when you have a question, or you need a good resource, someone who can help me get informed about this somewhat esoteric category. And not only do they have experience in that category, but they've probably been a part of a successful company or organization here. So they know what good looks like, and they can help you recognize it and find it for your own. So those are 4 things now that have changed so much in Seattle that all of us, founders, investors alike, can certainly capitalize on. And I think you see that in the kinds of success stories that even happen more and more quickly these days here in town. Thanks, Tara.
Great, thank you. Perfect.
I know one question that came in, Julie, while we wait, was just essentially, outside of pitches, what are you reading? And I think in general, people are just curious how you stay on top of trends and emerging opportunities.
I feel like I always have this like creeping sense of anxiety in my life that I'm not on top of things enough, because there's just so much that happens every day, just in the tech industry alone. And you add the startup and the venture pieces, and then what the big companies are doing. It's really hard. So it's such a great question. For me, I use Tech Meme, as sort of my basic morning reading that kind of lets me hit like the top, at least scan the headlines of the top, 40 stories or so that's in the news. Whenever I meet with somebody as well, especially someone who might be in a different industry or stage focus or function than I am, I just ask what do you think is interesting that's going on right now? And I treat every meeting or e-coffee these days as just a learning opportunity too, and making sure that I'm asking those questions when I chat with folks. And then beyond that, I'm a Twitter fiend. Like I'll tweet maybe less often than most VCs will, but I read everything. And so that's for better or worse, a big source of a lot of the dialogue happens outside of media outlets. And that's been a very helpful tool as well.
Good. Other questions people have? People want to speak up?
Yes, Julie, this is Alejandro Di Tola. I am been an entrepreneur myself, and I'm also now on the investor side. For angel investors, in your experience, what you have seen, how can we improve what we do at not only identifying the companies, but also being more supportive of the founders?
I would say that it's probably the same answer for both venture investors and angel investors, which is that there's going to be rainy days for any company, right? Like, I can't think of a successful company story that I've been a part of that did not have near-death experiences or moments where it felt like, nope, these guys probably aren't going to be able to figure it out. And that is so normal. And sometimes, by the way, you have near-death experiences, and ultimately it is the beginning of the end. And what I'd say is, irrespective of what the journey looks like, just thinking extra hard about how you communicate with the founders, with all the key stakeholders of the company on those rainy days, to continue to show conviction and belief in the thesis, that you show support and just as much, if not more, willingness to roll up sleeves and help and make that connection and help address a challenge, get on the phone at 12 o'clock at night if need be. Those are the kinds of things I think that matter a lot. And when I talk with founders about the most impactful angel relationships they've had, those have been the strongest, and those have been among the top characteristics that jump out. Because when you're an angel, you're often the founding investor, right? Like, you're a founding partner on that journey, and that's such an important role. And being willing to embrace that roller coaster with gusto, knowing that it's normal, is, I think, a really powerful thing to bring. And thanks for that question.
Thank you.
There's a couple from the chat, maybe combine a couple of questions here, I guess. One, I guess, is in terms of looking at early stage companies, I think there was a question about whether or not you have an opinion on if you have just a sole founder versus a team. So maybe if you can give some sense of, clearly you spoke to the importance of the team, how people should think about both, when's the right time to start to reach out, even if they think they have a really good idea. Yeah, maybe start with that. And then I think people would also be interesting to just think about, given that you said it's such a frothy market right now, in general, and you will be providing your contact information, so just people know, of course they can get in touch with Julie, but in general, how should they think about trying to reach out and engage firms to make sure that they really are getting good engagement?
Yeah. What was the first question again? Sorry.
Sorry, well, the first one, was really this idea of, like, I think maybe a way of looking at it, is it too soon to start talking to a funder if you are just a sole founder and haven't developed a team? I think is maybe one way of looking at that, which, yeah.
My best answer to that is it depends on the funder. For us, I mean, we've backed, 2-person founding teams. We've backed sole founders. A lot of it just kind of depends on the team mix and what market is being, attacked in the context of that company. So, I don't have a rule of thumb for that. I would have said a few years ago, oh, you need to have a business founder and a technical founder, and they have to come together at the beginning. And I don't believe that anymore. I think there's just so many great examples of companies that have been founded both ways, that it really kind of depends on you as a founder to look at yourself, look at your business and say, okay, what am I good at? What do I suck at? When do I need to bring in the areas that I'm not as strong at, and surround myself with those folks, and make sure that I'm able to articulate a clear plan to bringing those folks on board if it's just me. I have seen companies that have like 5 or more founders from the outset. I'm maybe a little bit biased against those contexts for a few reasons. One, I found that often those teams form without a clear sense for why each person is uniquely there. Often it's like, we really want to work together and we all have different skills, and that's great. But it's really hard to start with a 5-person team, or even maybe sometimes a 4-person team, and have it be very clear what each person is going to do from a senior leadership perspective moving forward. Also, makes the cap table tough when you take your first few rounds of venture financing and suddenly, you all started with, 20% plus an option pool, and, it goes down pretty quickly. So you want to make sure that your senior leaders in particular have a lot of motivation on that cap table. Hopefully the pie gets so big that it doesn't matter anyway, but at the beginning that you want to make sure everyone stays motivated. So The second question, remind me, Josh.
Yeah, no, I think just more broadly then, so how should people think about engaging? Let's just take Pioneer Square, but in general, like how should they think about just, is it literally just sending an email or trying to get a meeting or they're getting a coffee? Should they be prepared to pitch all at once? What should people be thinking about there?
Yeah, I mean, in my career, I have invested in 2 companies where I met them over the transom. Like it wasn't the proverbial warm intro that everyone says they want, just random cold connections, and then, build a relationship and ultimately, partner together. So there's a lot of ways to do it. I would say that, it has become pretty a kind of obsolete statement to say, hey, we only will meet with you if you can find somebody who knows me and get an intro, because that shows that you are very entrepreneurial and able to find resources like that. But the problem with that is it doesn't totally address the natural inequities that exist in this market that we've talked about. So more and more, I think, messages that come over the transom, or they come over Twitter or email or LinkedIn. I will look at everything. Sometimes you'll get like 100 in a day and you can't respond to everything, but we'll see everything. And, you're able to let folks know, hey, yeah, I would love to, see, your blurb or your deck, or maybe even we'll do sort of an initial meeting and take it from there. So I'd say, because the industry still has its biases, if you can get an easy warm intro for most people, great, go for it. But I think more and more, especially younger generations of investors, are more open to different channels for making those connections.
Yeah, I think that's a great perspective on scale. You literally look at thousands of companies a year, right? It's a big number in terms of the top of the funnel.
It's a lot, and sometimes you have to make, pretty snap decisions based on hey, this is how this email is written, or hey, this sounds competitive with this company, or hey, maybe we're too overexposed to an area. But yeah, you do have to look at a lot of initial sort of if not full plans, then certainly sort of intros, and make a quick decision on whether or not it's likely enough to just spend real time. Otherwise, it could be a full-time job, just meeting with everybody who reaches out alone.
I have a question, if I can chime in.
Yeah, go ahead.
My name is Diana. Thank you. I actually, the weirdest thing, like, I'm so excited to finally find a community that kind of the brains work the same way. I felt so alone for so long. And I actually, it's the funniest thing. Like, I found out about you guys through a Hinge date of mine that we went on one date. We found out we were both entrepreneurs, and that was like our whole conversation. So I'm super grateful for Hinge, even though I've deleted it. But my question is more to the effect of, like, I come from a very traditional, like, Romanian background, single mom of 5, entrepreneur since 2016, ex-ICU nurse. There's a certain, like, hustle and grind that comes with, as I'm sure everyone knows, with just like startups and everything. And, I've kind of like started from scratch this past year, and I'm just having a hard time. I find a lot of people that look up to me and want like that mentorship and that life coach and whatever. And that's all great. And I have a lot of patience for that. And I love investing in people. But on the same token, like, how do I find people? What's the best avenue for me to find great co-founders that aren't necessarily just like, I know someone that's like a cybersecurity specialist, and he's brilliant. He's great, but it's not the same hustle. It's not the same prioritization. It's not the same like life experience type of thing. Do you know what I'm saying? How do I find the right people to partner with in order to like grow and whatever? Like, I have so many ideas. I tell people all the time, like, just don't get into my head. You'll get shot by a missile. Like, there's no way, but how do I find people that can actually like have the same, consistency and drive and ambition, and then, we can ground each other, and much in the way that you said, like, very different people coming together with different strengths.
Well, first of all, Diana, I just want to do this for a moment, just to acknowledge that I suspect you've defined the word hustle for many years now. I would say that, if you are anything at all like me in terms of how you create your calendar, it's very easy to be reactive. In other words, like you describe, a lot of folks reach out to you. A lot of folks say, oh, Diana is a role model. I want to be like her across these dimensions. And you end up saying yes to a lot of things that, are just like a really wonderful ways to, pay luck forward, pay insight and experience forward. one of the challenges with that is that because you're responding to so many things, that it's hard to be as proactive about like, like who would I meet with right now if I could meet with anybody right now? Like who's got experience in this community that I feel like I could learn something from? And when you're inundated like that, it's really hard to be proactive. And by the way, you know, a lot of women founders in this community say like very similar things to you around that challenge, because everyone wants me to speak, everyone wants me to be a mentor. And what I would just say is, if you could just like take a few weeks out of your year where you're like, I'm just either going to punt or say no to things. And I'm going to take those 3 weeks, and whether it's during the pandemic and everything's zooming and efficient or not, I'm going to reach out to, you know, like 30 people, you know, just to have chats and see if they'll hop on the Zoom, or hop, if it's post-pandemic, hop over for coffee with me. So I can pick their brain on stuff and ask them, you know, what do you think about what I'm doing? And hey, I'm looking for someone who can be my co-founder or first employee or investor or what have you, and just ask the question. And not every one of those meetings will result in like the, you know, perfect unicorn outcome, but I promise you, you will find very interesting leads just by putting yourself out there and making sure that you're doing it systematically. So few people do that, especially when you're inundated, and just sort of making that resolution. You're only going to focus on yourself for that period of time. And then when that time's over, I would say make sure that you keep that up for the majority of the way you spend your time in those meetings. And it's okay to say no sometimes. And, you know, I hope I've learned that lesson, I think, off and on over many years. And I hope that idea is a helpful one as you address the big challenge of finding your co-founder.
It definitely is. And I've very much adopted that mentality as well, because I realized that I was like veering off, and I was like, whoa, I need to really like address these things. And I've met a lot of great people. They give me amazing feedback on like my ideas on, you know, because I have multiple. And but it's like no one will still like kind of be like, yes, let's do it. Like, I'm ready. I want to do it. Like that work ethic. So maybe within this community, I guess what I'm asking is like, should I be signing? Is there like a sign up for like the Alliance of Angels? Are there going to be like events much like this one where people kind of meet and socialize, and then you can find people, you know? Things are so different now that there's a pandemic. That's the problem.
Totally. I mean, I don't know if AOA community leads want to speak up as an answer to that question specifically about AOA, but
yeah, but I'll say on their behalf, yes, the AOA is if you haven't connected, I would definitely say connect. Their team has a lot of, they know just kind of everybody. They're behind the scenes a lot, and there certainly are things going on virtually as well. So. Great, Dana. And someone else seconded your question, so very good question. Who else has a question here for Julie?
Do you mind if I ask one quickly?
Please.
Yeah, there was an article that came out kind of looking at Q2 and Q3 and all the investments that were happening in the Pacific Northwest. I'm in Vancouver, Canada. And as I read through the article, it was showing, you know, it was almost like double what it was last year, but then it was showing that, you know, in the years prior, there was more money going towards Vancouver and towards women in the past, and actually we're making up less of that proportion. So I find what happens is a lot of time, like we've built a fintech platform in the family office space. I've been in that space for like 6 years, know it inside out, and we've got great traction with institutions. But every time we go to pitch to a VC, I find like the most recent one, we were in due diligence and the last call was half an hour. And I think me and my co-founders spoke for maybe 3 minutes. And so we just kind of got mansplained. And then we got an email after saying, the wind is at your back. Like, it's all about women entrepreneurs. And I was like, well, yeah, maybe if you gave us a chance to speak. So I don't know if you have any advice for female entrepreneurs, because I also think like we take a very different approach. Like we are a lot more cautious and maybe not as bullish as our male counterparts. So we were very thoughtful in launching our platform and really getting customer validation before we went and spent a lot of money on the technology side. So now it seems like that's almost working against us. So I don't really know how to navigate that space, because we come from the business world and not so much the tech world.
Well, Simran, thank you for both the story of what your experience has been so far, especially during the pandemic, and for the question. What you've seen in the numbers is what I have felt in sort of the venture community on the ground, which is that those sort of inequities that we talked about from a network perspective that have persisted and gotten and existed for a long time have gotten so much worse during the pandemic because of the Zoom effect. Because, well, I'm probably more likely to invest in someone where it feels like I can kind of catch their vibe better. I can read them better. I kind of am used to communicating with folks who remind me of that person. And you see a lot of folks kind of going into their circles and into their caves a little bit more with regard to who they're investing in as far as new investors go. For sort of general thoughts on, pitching in general, pre-pandemic, post-pandemic, during pandemic, this is the advice that I would give to I'd say any, underrepresented founder in tech, but especially to women because of the reasons you described, which is that you have to remember that, the pitches that, I'm listening to and any, VC or angel listening to all day are often lined up side by side. And, before you is probably an incredibly confident 29-year-old white male who has been taught habitually over time to just pound their chest and everything that I'm doing is brilliant and amazing. It's going to change the world. And typically, and this is painting with broad strokes, because it's not every, but for many women, the idea of, standing up on the proverbial table and doing that is just not natural, and it doesn't feel authentic. It feels weird. And what I would say is that you don't have to sound exactly like the person who pitched before you. You don't have to communicate that way, but you should walk out of every one of those conversations, whether it's a pitch or a dialogue or what have you. You should feel like you are walking out of that meeting as the most braggy, confident, I am the inevitable person type of attitude version of yourself that you possibly can, because odds are you're probably only getting a little bit closer to what the folks before.
Yeah. No, it's hilarious because we end up trying to learn as much as we can from the VC. So we end up listening, and I'm like, okay, well, I think I did way too much listening and not enough telling them of everything I've done over the last year, which is actually incredible. And we have a chief executive that ran HSBC on our board. How much better does it get? And I don't even get to that point because I'm somebody will just take over, and it's we are two very, very bright women. So we're if we're experiencing this, I can't imagine what other people are experiencing. And I was so naive going into this. I just thought women probably aren't getting recognized as much because we're not taking entrepreneurial steps. And then you get into it and you're like, oh no, I'm doing everything. I'm still not getting the same traction as somebody else would. So I don't know if there's anybody that has anything to learn that's read a really good book. I'm totally open to any suggestions to kind of build that confidence and be more bullish.
Simran, I'm going to send you my email address. Literally, the VCs that I was able to attain for one of my startups told me, Diana, you are this badass that looked me up through Facebook and said, listen, I'm going to do this whether or not you come and help me. It might take me a little bit longer, but I'm going to do it. Are you in or are you out? And he was like, I was sold. So amazing. We need to connect for sure.
I'd love that. Thank you.
And Simran, if it's at all helpful to hear, the dynamic where you're speaking for 2 minutes of a conversation with an investor is just categorically wrong. That's not supposed to be what it's like. So probably on one hand, good that sort of what the dynamic would be like was revealed early with that person. But of course, I'll share my contact info if I can help, or you want to chat or anything, would be delighted to get the chance to chat with you too.
I'd really appreciate that. Thank you.
Thanks.
Other questions?
I was going to ask.
Go ahead.
Great presentation, by the way, Julie. Love this. Thank you so much. The question I have is, when entrepreneurs are starting, there's always that income lag from launching the venture and kind of have them carry themselves and devote themselves full time. So how do you counsel folks on making that transition from a steady income and job into, let's go to a venture where you might not get income for the next, 1 to 2 years or more?
Yeah, so this is one of the things that I think has changed a lot in terms of venture industry perception and founder perception over the past 10 years. So like when I started in the venture industry, I would say most VCs would say, yeah, I'm not going to invest in any company where it feels like the founders aren't willing to leave their day job. It shows that you don't really have the commitment to the idea that I need to see. And like, it's such an absurd statement. Like, people need income to live, to feed their families, to feed themselves, to have, a roof over their head, for goodness sake. So that has thankfully evolved amongst most strong investors that I know. One of the reasons that we built the startup studio at PSL is because of the fact that, hey, you could be working on one of these ideas for a really long time, full time, and still not see the sort of the fire in the particular pathway emerge. And that sucks if you've left your day job and it ends up taking those extra several months, or in some cases, year or more to figure it out. So, our approach is, hey, you become an EIR, and what will pay you as you go. We've worked with folks who are working full time, including at big companies that have, demanding, full-time jobs, and I have to be there, from this hour to this hour, doing moonlighting and weekends and being available to work through projects then. And there's more and more resources like that emerging across not only our ecosystem, but I think the technology community at large. So I would say, one, if you encounter an investor who's at all biased against, you for continuing your day job while you, bust your ass like in the evenings and weekends, then, probably not the right sort of first round investor for you. And I would also say too, that, once you are able to raise capital, whether it's your pre-seed round or your seed round, most investors will expect at that point that you can take a six-figure salary at least, to make sure that you're able to make your expenses. And that's become a commonly held belief. And in fact, most investors do not want founders to be at the point where they're stressing about, existential things while they're trying to do the impossible of building a venture scale company too. So there's been some nice evolution there, packed with challenge, but important to acknowledge the fact that, many, many people can't just leap into nothing and be okay with it.
So refreshing to hear. Thank you.
And Julie, clearly there's, for good reason, everybody is really, so focused on raising that round. But I guess, what are the key sort of non-financial factors you'd really suggest that founders take into consideration when they're looking at a potential investor, whether they have the opportunity to compare one versus the other? But because I know it's so easy that once there's a number on the table to get very reactive, and how do you make sure that a founder is staying in control of their destiny and just being thoughtful about really a long-term partnership and how to structure that appropriately?
Well, VCs tend to be pretty good at talking. Like, we talk a good game, we can make our firm and our brand and our story sound really, really good. And you should ask all the tough questions that you want to ask of the investor, make them uncomfortable, see how they respond, whether they get defensive or not. But the best thing you can do is to just reach out to the CEOs and founders that they've worked with before, companies that have gone well and companies that have not gone well, and ask you, what was it like to work with this person through that experience? Like, what are they like on that rainy day? How did they handle situations where their funds or their investment interest was at odds with the company's interest? Like, where do they fall on the decision-making spectrum? And learning that way, just the same way that, VCs and investors are calling, your references. Those are the best references you can get on the investor. And, I've always said this, like, if it ever gets to the point on both sides that, it feels like you should be seriously considering me and I should be seriously considering you, like, here's literally everyone I've ever worked with. And you should just, reach out and get the answers for yourself, because one, I'd want to make sure that founder is excited about what value I can bring to that company and to that story and how I'm going to work with them. And it's important on my side too, that they feel comfortable and also interested in, who I uniquely am as an investor, as a person, as a board member, et cetera too.
Well, great. Well, good. Well, is there, let's see, we have probably time for one more question if there's somebody that wants to speak up.
I have a quick question. Hey,
Sure,
Julie.
go ahead.
Good to see you.
Hi, I'm trying,
Rashmi here.
I'm trying to find you on the Zoom. I can't see your face.
Oh, sorry. I've had some issues with my iPad recently, and
Hi,
so you might not be able to see me, but I can hear you.
Yeah, no, I see
Good
your
to see
tile now.
you.
Hi, good to see you.
Yeah. I had a quick question regarding solo founders. Obviously, I understand that a lot of VCs are looking for ways to de-risk their investments, and one of the biggest places that they start is making sure that there's a solid founding team. We're in a position where we have a very strong team. However, I am a solo founder. And while we're looking for a technical co-founder, it's been really difficult to find someone with the skill set and the culture fit that we're looking for. And I just anticipate that, it'll be at least a few more months before we can bring someone on board full-time in that capacity. So I'm wondering if you've seen a shift towards being more open-minded in the venture community with regards to investing in solo founders, or is it still very much, you have to have a co-founder? Because I feel like that is such a broad brushstroke and very sort of a protocol approach to investment that doesn't necessarily fit all companies, ours in particular. So I'm wondering if you've seen anything recently in terms of trends that could be in our favor or against, what we're building.
Well, so Rashmi, before you joined, I think Josh asked almost that exact same question, and my quick summary would
sorry.
No, not at all, not at all. I would just say very quickly that these days, I think we're invested equally in both, in companies that founded with solo entrepreneurs and co-founding teams. And I think it's important to recognize that it totally varies by team, by market, by function. One thing that I have veered away from is teams that have like many founders, and that tends to dilute both the value of each founder as well as the cap table itself. But I think we try to be relatively equal opportunity if the entrepreneur is thoughtful about his or her strengths and weaknesses and very self-aware enough to hire around them and recognize what the path is ahead to be able to hire around the areas of needed support.
Okay, thank you.
Of course.
Well, great. Well, we're to the top of the hour here. So I want to first and foremost thank Julie for joining us today, and really appreciate the thoughtful commentary and all the work you are doing. And thanks to everybody for participating in your questions. Definitely would encourage you to, if you're not engaging with Alliance of Angels outside of this event, definitely do that. Their team is just an amazing resource. They're really well connected. And I think this community that Diana and others spoke of, I think you'll find is richly represented through AOA and its members and the folks that they partner with. So appreciate that. I know. So yeah, Julie's information I think will be available. So as she said, they're looking for the next big thing. And if we can be of any help, we're certainly happy to do that. And otherwise, happy holidays to everyone, and stay safe.
Yep. Thanks again. Thanks very much to Josh and Julie for joining us today and sharing with us the insights. Thank you, everyone, and happy holidays. Take care.
Happy holidays.
Thanks, Jane. Thanks, Julie. Take care.
Thank you. Thanks, Josh.